If you are serious about getting rich this year, you have to stop sleeping on ETFs. These are the lazy investor's cheat code to building wealth. And today, I'm gonna give you 5 powerhouse ETFs that can make you a millionaire if you play your cards right. I'm gonna break down exactly what ETFs are, why they are far better than picking individual stocks, and most importantly, why these particular 5 that I'm gonna give you today are your golden ticket to finally getting financially free. And stick with me to the end, because at number 5, I'm gonna tell you my absolute favorite one of these. This one got me over 160% return in just 1 year. Crazy. Now, if you are really ready to get to this money for real, I need you to smash that like button, subscribe to this channel, and punch that bell for notifications so you never miss a single money-making nugget that I'm about to drop. All right, let's get into it.
We getting money, money, money. When Jameer sharing gems with her getting money, money, money. Getting a line, growing money and time. Getting money, money, money. It's your life, trying to get more life. Money, money.
What are ETFs and why do you need them? All right, let's start with the basics. ETF stands for Exchange Traded Fund. Think of an ETF like a basket of investments. Instead of buying just one stock, you're getting a whole collection of stocks or assets in one single purchase. This is huge for you because it means you get instant diversification, thereby mitigating your risk for those of you who are worried about losing your money in the stock market. So instead of putting your money in just one company like Tesla or Amazon, you're spreading your risk around multiple high-performing companies. The second benefit of ETFs is that they have a far lower risk than picking individual stocks. Let's be honest, most people are not stock picking geniuses. If you buy shares of stock in the wrong company, you could lose a lot of money really fast as you have to wait for the stock market to build itself back up. Now, I always say the stock market has never not recovered, but it takes time for it to recover, right? So if you buy shares in a company and that company falls, you haven't really lost true money until you actually cash out. However, you can take the money that's left and put it into a different stock, but you gotta wait for the stock market to recover and build your account back up. But with ETFs, if one company flops, your whole portfolio doesn't go down with it. So remember, I'm gonna tell you 5 powerhouse, really incredible, almost fail-proof ETFs to invest in. So let's say one of those has 500 different companies in there. If 2 of those companies flop, you still have 498 other companies that are doing well. See what I'm saying? It makes it so much easier to make money in the stock market that way without having to worry about the risk. And here's the best part. ETFs are passive income machines. You don't need to be glued to stock charts all day or spend your energy trying to time the market. Just buy, hold, and watch your money grow. Now, not all ETFs are created equal. Some are straight up money printers, while others, they just don't perform as well. The 5 that I'm about to give you are top tier wealth builders that have proven themselves over time. And what's even better is that some ETFs don't just grow your money, some of them actually pay dividends. Seriously. Just because you own the ETF, they will literally send you a check just because you're an owner, not for doing anything extra. Now that's passive income for real. And while some of these ETFs pay you dividends, others give you access to emerging tech like AI and crypto. And some let you invest with the biggest companies in the world just in one click. So let's break them down, and let's start with the classic money printing machine, VOO. First up, we have the Vanguard 500 Index Fund, ticker symbol VOO. And this one tracks the S&P 500. So what is the S&P 500? The S&P 500 stands for the Standard & Poor's 500. It essentially is a listing of the 500 largest companies in the US. So when you invest in VOO, you're getting a slice of every single one of those companies by just making one purchase. Some of these 500 companies include Apple, Tesla, Amazon, Microsoft, and so on. Now let's get into the numbers, right? Because you know I like to just run the numbers to illustrate why this is so vital. And here's why VOO is a must-have for long-term wealth. Is literally one of my favorite ones because it allows me to have access to all of these companies. A lot of them are cost prohibitive to purchase individually, but if you just purchase VOO, you're purchasing all of them, 500 companies at one time. Over the past 10 years, VOO has returned an average of 13% per year. So that means that if you had invested $10,000 in VOO 10 years ago and just let it sit there, never added another dime to it, you would have about $34,000 today without doing anything extra. And here's what I love so much about VOO. Because it tracks the S&P 500, the S&P 500 has actually never not recovered from a crash in the history of evers. It's always come back. So if you want consistent, reliable growth, VOO is going to be one that you really want to pick up. Next up, we have the Investco QQQ Trust, ticker symbol QQQ. This one is an absolute monster in the tech space. QQQ tracks the NASDAQ 100, which essentially tracks the 100 largest non-financial companies in the United States. So in there, we've got tech giants like Nvidia, Google, Meta, which is also Facebook and Instagram, and Palantir. Now, we've talked about Palantir before on this show, and if you would like to dig even deeper into why Palantir is an absolute must-have for you, make sure that you click on the link above if you're watching this on video, and I've also put the link in the show notes for you if you're listening on podcast. Now, I know we've talked about how great the S&P 500 is when we talked about VOO just a little bit ago. And remember, those 500 companies in VOO returned about 13% per year over the past 10 years. But QQQ has actually outperformed the S&P 500 with an average return of 18%. So that means that if you had put $10,000 into QQQ 10 years ago, you will have about $50,000 today. And again, that's without you doing anything else or adding any extra money. Listen, tech is not going anywhere. AI is the future, and QQQ is the easiest way to invest in these companies that are shaping the future. Now, let's talk about number 3, which is the Schwab US Dividend Equity Fund, ticker symbol SCHD. Now, this one is the king of passive income. And you know I like me some passive income. This particular ETF focuses on high quality dividend stocks, meaning it not only grows your money, but it also pays you dividends. Okay, so we talked about it briefly earlier, but let's break this down even more for people who might be new to dividends. If you're already familiar with how dividends work, just stick with me. We're just gonna stay here for a little bit and then we'll move on. So a dividend is basically free money that a company pays you just for owning their stock. Think of it like a thank you check from companies that are making consistent profits. So let's use an example. Let's say you own stock in Coca-Cola. They make billions of dollars every single year. So instead of keeping all those profits for themselves, they pay a portion back to their shareholders. And that's you. And companies like them will do this every year, oftentimes every quarter, and sometimes even monthly, depending on the company. Now here's where it really gets good. When you reinvest your dividends, instead of taking the check and spending it yourself, you can use that payout to buy even more shares without you coming out of pocket. And that means your next dividend check is going to be even bigger. But again, remember, you didn't spend any extra money. This is your dividend that they sent you. You then reinvested it back into the same company, bought more shares. So now you own more of the company. Now you get even more passive income because now you're getting bigger dividend checks without doing anything more. And over time, this creates a snowball effect where your money is just compounding faster and faster and faster. And the checks are getting bigger and bigger and bigger. Now, SCHD is one of the best dividend paying ETFs out there. And that's because it invests in solid, reliable companies that have a history of increasing their dividend payouts over time. So not only are you growing your investments, but you're also getting consistent, increasing passive income every year. Okay, let's do some quick math here. SCHD has averaged a 12% return per year, and that doesn't even include the dividend payouts. So if you had invested $10,000 in SCHD 10 years ago, you'd have over $32,000 today without reinvesting the dividends. But if you had taken that same $10,000 that you invested in SCHD 10 years ago and reinvested it, which I'm going to tell you how to do in just a moment, that $10,000 would have grown to over $48,000 today. That's just by reinvesting the dividends. So it's the difference between $32,000 and $48,000. That's a $16,000 difference just by clicking a button. So let me tell you exactly how to turn on dividend reinvestment. Automatic reinvestment is called DRIP, D-R-I-P. That stands for Dividend Reinvestment Program. And it is literally just a matter of clicking a button in your brokerage account. In most brokerage accounts, you just need to go to your settings. Go to your settings, find where it says DRIP or Dividend Reinvestment, or it might even say Automatic Reinvestment. Seriously, just click a button and turn it on, and that's it. You don't have to do anything else. You don't have to mail in any forms. You don't have to make any phone calls. Every brokerage offers this, whether you have Robinhood, Charles Schwab, E-Trade, Fidelity, Moomoo, M1, any of them. They'll all offer it. Now, if you can't find it, you can simply go to Google and type in how to turn on DRIP in, and then insert your brokerage company's name. So example, Google, how to turn on DRIP in Charles Schwab, how to turn on DRIP in Robinhood, how to turn on DRIP in Fidelity. Now, if you don't have a brokerage account, you're gonna need one. And you can click on this video right here if you're watching on video, or in the show notes if you're listening on a podcast. And I'll tell you step by step how to open a brokerage account. But let's get back to SCHD real quick. So like I said, you would have made $16,000 more by just reinvesting those dividends automatically, again, by just pressing a button. But this impressive growth highlights the power of reinvesting your dividends, allowing your earnings to compound over time and significantly enhancing your total return. returns. So if you love not just making money in the stock market, but also getting paid for making money in the stock market, schd is a no-brainer. Now let's talk about number 4, which is TOPT. And this is a new kid on the block. If you want next level wealth, you've got to be ahead of the trends. You can't fall behind. And that's where iShares Top 20 US Stocks ETF comes in. Ticker symbol for this one is TOPT. TOPT is a pretty new ETF and it's comprised of the 20 largest companies in the US. And it includes the Magnificent Seven. Now, if you don't know what the Magnificent Seven are, that's okay, because I'm going to tell you. The Magnificent Seven are the 7 most highly valued companies in the US stock market. And at the time I'm making this episode, those 7 stocks include Apple, Amazon, Google, Tesla, Meta, Microsoft, and Nvidia. But not only does TOPT include these 7 behemoth companies, it also includes other companies that we know are going to kill it year after year after year, like JP Morgan, Walmart, Netflix, Procter & Gamble, Home Depot, Costco. Now, if you bought just one share of each of these 20 companies, you will be spending tens of thousands of dollars. Or you could just buy TOPT, which as of the time I'm making this episode is trading under $30 a share. And by doing that, you would still get shares of all the same companies, but at a fraction of the cost. So if you want early access to potentially huge gains, this ETF, I'm telling you, is a gold mine. Now, like I said earlier, it's a relatively new ETF. It just became available in October of 2024. So we don't have a lot of historical data to use for this one. But almost every company on this list has had gains of over 1,000% since their inception. So if that's any indication of potential growth, this one is almost certainly a sure bet. And now we're going to get into number 5, which is my favorite one to talk about because it's so exciting. The growth on it is incredible. And I'm going to show you the math. Now, this one is the iShares Bitcoin Trust, otherwise known as ticker symbol IBIT. So I'm going to call it IBIT. We've all seen the incredibly staggering numbers on Bitcoin. And some of us are absolutely sick to our stomachs because we didn't invest in Bitcoin earlier. Listen to this, okay? If you had invested $1,000, just $1,000, most of us can scrounge up $1,000 from somewhere, right? If you had just invested $1,000 in Bitcoin 10 years ago, you would have over $300,000 today. Crazy, right? If you had invested $10,000 10 years ago in Bitcoin, today you would have over $3 million. Wild. That is absolutely wild. And I'm not gonna say it's too late because it's never too late really, but it's kind of cost prohibitive nowadays for people to buy even one Bitcoin. As of the time I'm making this episode, one Bitcoin costs over $100,000. So if you got $100,000 in disposable income just laying around that you can choose to invest in one Bitcoin, more power to you. Definitely do it, right? But for the vast majority of folks, they don't have that. And most people think it's too late for them to get involved with Bitcoin. But that's where I come in. That's why you're watching the Get Money Show, because I've got you. Instead of trying to somehow find $100,000, if you have 65, you can still buy into Bitcoin. As of the time I'm making this video, one share of the IBIT ETF is trading at under $65. Now, it's important to keep in mind that just 1 year ago, this same ETF was trading at $23. So in 1 year, that's 161% returns. See why I say it's my favorite one? Bitcoin ETFs make it easier than ever to invest in crypto without the hassle. So if you missed the first Bitcoin wave, now is your second chance. I've got a whole episode on Bitcoin, what it is, how it works, and how you can still get rich from it, even if you're starting at zero. You can find the link to that by clicking above if you're watching this on video, or as always in the show notes if you're listening to this on podcast. So let me summarize this IBIT Bitcoin ETF with this one thought. If you had invested $10,000, remember, in just 1 year, this ETF has gotten 161% returns. This is bigger than any of the other ETFs that I've talked about, hence why it's my favorite. If you had invested $10,000 into the IBIT ETF, you today would have $26,100. So you would have made over $6,000 completely passively in just 1 year from one ETF. The returns on this are astronomical. And even though one Bitcoin currently costs $100,000, analysts are predicting that it's actually going to go up to $1 million, which makes it even harder to buy in. But if you purchase the IBIT ETF, like we're talking about right now, it still tracks the progress of the Bitcoin, but at a fraction of the cost. So again, remember, a year year ago, this was trading at $23. It is now currently, as of the time I'm making this episode, at just under 65. So if a single Bitcoin is going from $100,000 to $1 million, that means it's going to 10x its growth, which means that the IBIT ETF is also going to 10x its growth. So that means that today at around $65, this same ETF is going to 10x potentially, which means that it could potentially go up to $650 per share. Don't wait till it gets to $650. Buy it today, so that way you can get in, you can buy several shares and really make some money. Don't say I didn't warn you. This year is already underway and you need to make your money moves now. These 5 ETFs that I just told you about give you broad market exposure, tech growth, passive income, AI innovation, and a crypto upside. So tell me in the comments, which of these 5 ETFs are you buying first? Let's talk about it. And if you're serious about building wealth, you can join me in My Rich Friends, my exclusive private membership for those of you who are really ready to take your money to the next level. The link is in the description. And make sure that you like, comment, and subscribe to this channel. And I'll see you on the next episode. Bye.